Effective money management is a fundamental skill that can have a profound impact on your financial well-being and overall quality of life. Whether you're looking to achieve short-term financial goals or secure your long-term financial future, mastering the basics of money management is crucial. Money management is also a skill. This means that anyone can develop and master it. It's all about having the right financial literacy, and it's much more than just putting money away for future investments today. I'm going to teach you the fundamentals of money management, which will change your financial life. This is so important for a healthy life, especially if you're planning to grow your income and you'd like to expand your horizons. Now let's get started. It's all about how much you keep. If you're looking for growth, here's something you should remember at all times. It isn't about how much money you make, it's about how much money you keep. For growth, it doesn't matter if you're making $10,000 every single month. If you're spending it all, if you don't have anything to invest with in the future or to rely on in case of an emergency, you're always one paycheck away from disaster and even bankruptcy. Did you know that 70 of lottery winners go bankrupt after winning the lottery? Why is that? First of all, they have no idea how to handle that kind of money. They're going to invest it in things they don't understand. They won't control their emotions in front of the tempting opportunities. They won't even keep track of their money, failing to understand that $1 million isn't endless money. Money management is what keeps you away from disaster. So, if you're looking for growth, you should start thinking about how much money you're putting aside for investments and savings. If that percentage is smaller than 10%, you should reconsider your money management strategy. But here's the reality. Most people don't even know what that percentage is. And that leads me to the next point. Keep track of your finances. Most people have no idea how much money is coming in and how much money is going out. You must keep track of every single penny that you're spending. And then you should classify your spendings into 4 or 5 categories depending on your financial situation. But why won't most people keep track of their finances? Well, there are a couple of reasons. They're lazy and they're afraid. Let me unpack this. Keeping track of your expenses, investments, and savings might be a lot of work for some people. Sitting down on a weekly or monthly basis and putting a bunch of numbers on a table or a worksheet sounds out of this world for some people. Second, people are afraid of what I can hear you asking. They aren't comfortable with the truth of how much money they are truly spending on useless things. This is because keeping track of your money reveals to you your spending habits, which might be deeply unhealthy. When people are uncomfortable with the truth, they do one or both of these things. They delay the truth as much as possible instead of revealing it now. They avoid the truth and pretend everything is fine. Classify your spendings. Here's how you should classify your expenses. Money has 5 functions. You make it, you save it, you invest it, you spend it, and you donate it. The last one might not be right for you depending on your financial situation, but it's an important role that money plays in our society. Most rich people donate thousands if not millions of dollars. And we're not talking about random charities, but about charities that you actually care about. Anyway, most rich people divide all their expenses into 4 or 5 categories. Needs. This is everything that you need in order to survive. We're not talking about that new pair of expensive shoes you've been looking at for the past couple of weeks. We're talking about what you actually need in order to survive. This includes your rent, food, water, fundamental bills like electricity and water. If you're in a negative financial situation, you might also want to look for ways to save money on your needs by changing your subscriptions or moving to a less expensive apartment. A gym membership is also considered a need, since it's important for your health. But you should consider working out with no equipment at home. This is everything that you don't actually need in order to survive, but you simply enjoy. This includes every night out with your friends, sweets, your Netflix subscription, and anything that you don't need to survive. This is where you should seriously cut out expenses. I'm not saying that you should cut out all at once, but you should consider cutting by at least 25 to 50% depending on your situation. If you keep track of your expenses, this will be easy to do. And if you have a fixed income, you just have to set a spending limit you need to live by every month. Savings. This includes all the money that you put aside for a rainy day or for an investment. Before saving to invest, you should save for emergency situations. Most Americans live paycheck to paycheck. This means that if they lose their income today, they might not be able to make it until next month. If you two live paycheck to paycheck, you're always 1 month away from failure. I don't know how comfortable you feel about that. So first, you should save for at least 3 months of rainy days. This means that if you lose all your streams of income, you'll be able to survive for another 3 months at least. Some people even save up to 6 or 12 months of rainy days. After you create your emergency fund, you're ready to start saving. Investments. This includes everything you invest in. Whether you see a return or not, it's not just stocks, bonds, trading, or real estate. It could also be investing in your education. That you should always calculate your return on every investment you make. You should always be comfortable with losing money. Debt. Debt is powerful if you have the brains and discipline. Have you ever heard people talk about how dangerous credit cards are? People are so afraid of debt they won't use their credit cards even in the most desperate of situations. People have a negative association with debt in any way, shape, or form, and for good reasons. Do you know the rule of compound interest? Compounding is usually presented as the best way to invest, and people like Warren Buffett love it. It means that the more money you make, the bigger your money-making potential is. It's like a snowball effect. Growth is exponential, and even if you start with very little money, you can make serious amounts of money if you have discipline, patience, and if you're clever enough. But here's something most people don't really talk about. Compounding works both ways. It can seriously grow your income, but it can seriously put you in trouble too. Especially credit card debt. You don't want it. Stay away from it at all costs. Always pay credit card bills on time. This is the most common form of debt in the U.S. among student loan debt and medical debt. With this said, debt also has potential. We're not talking about not paying your bills on time. We're talking about lending money from banks in order to invest, or even just using your credit card to improve your credibility in the eyes of banks. If in the future you're going to want to buy a home, or if you're going to invest in a business or buy one, you're probably going to ask for money from banks. In order to define whether you are credible or not, banks are going to look at your history and your credit score. If you never use your credit cards, you won't get that. Also, there are a few advantages. If you use your credit cards, the little perks your bank will offer you for using it. Here's a pro tip. You can actually call your bank and ask for a lower interest rate on your card. You can even ask for more perks and advantages. Most people don't know this, but you can negotiate with banks, and you're likely to get what you want if you ask properly. However, you're definitely not going to get it if you don't ask for it. So remember this, debt is a powerful weapon, but you can hurt yourself with it. If you have the right financial education and discipline, you can use this weapon. Otherwise, you should first develop and master your financial skills. You don't want to risk it all, just so that you can buy stuff with money you don't have. It's up to you. Money management is a skill that anyone can learn and master. By following these money management basics, you can build a strong financial foundation that supports your financial goals and ensures a more secure future. With discipline, patience, and a commitment to responsible financial practices, you can enjoy peace of mind and the freedom to achieve your financial aspirations. Remember that effective money management is a journey, and every step you take brings you closer to financial success. With that said, have a great day, you guys, and I'll see you all in the next one.